Does a recession mean that housing prices are going to drop? Today on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance. And on this channel, we discuss economic factors and the housing market and things that are happening and how they may be affecting your decision to buy or sell your home. So today I want to talk about something interesting. I want to talk about whether a recession automatically means that housing prices are going to drop, because recency bias in the last recession, not in the last recession. The last recession was actually the COVID recession, where housing prices skyrocketed. Most people think that housing prices drop in a recession. So I want to go through that really, really quickly with you. And first of all, I can't tell you what the future holds. I mean, everybody has an educated guess about the future, but not everybody has an educated guess. Some people just have a guess, not educated at all. But we're going to look at data, and we're going to look at history and how history has, how housing has performed throughout history, and what recessions actually mean to the housing market. So first of all, by definition, understand that a recession simply means that the economy is producing less than it previously produced. We have a shrinking economy. So just because the economy is shrinking does not necessarily mean that the housing market is shrinking or housing prices are shrinking. So shout out to Barry Habib and MBS Highway. Put this together. That's where I'm getting this chart from. But this chart or the presentation from, and two quick slides that I want to share with you. One is this, just showing how strong housing stays through a recessionary period. Now, if you see the dark blue lines here, you can see that these dark blue lines indicate a recession period. So you have a recession at the beginning of the 60s, one in the 70s and 75. There were kind of two back-to-back in the 80s, one in the 90s. This right here is the housing crash recession back in 08, 09. And this is the COVID recession right here in 2021. So you can see, despite the multiple recessions since 1960, housing has basically continued to stay strong and progress even through recessionary periods. The one where it went down is in the 08 recession, where the housing market was actually the cause for their recession. Now, just because housing prices are higher does not mean that housing is going to cause the next recession. The next recession really is going to be caused by the government trying to overstimulate the economy and inflation taking over, and people just not having the funds, and the Fed raising the Fed funds rate, and people not having the money to basically put money into the economy. Companies are going to start laying people off. This is pretty much inevitable. The Fed goes through a cycle all the time. They raise the Fed funds rate. We go into a recession, and then, unemployment goes up, and then they say, oh, wait a minute, we got to cut the Fed funds rate. And it's constantly a seesaw cycle. And I'll show you another chart to illustrate that here in a minute. But you can see that recession does not necessarily indicate that housing prices go down. But what people are focusing on is this 08 housing, it was a housing crash here, and they're saying, hey, next time it's going to be just like this housing crash. I remind you, we still have a humongous supply and demand issue in the United States. If prices drop, and the only reason you're seeing slower sales now is because of higher interest rates. So if you were to see interest rates come back down, which I anticipate they will, you're going to see a lot more competition, and you're going to see those surges in housing or housing prices carry on. Great. This slide right here. Now, while housing prices continue to go up in general, except for that one in 08, mortgage rates in a recessionary period usually come down substantially. So you can see here in the 1982 recession where interest rates were at, oh God, and you're at like 18 to 13% here. When you're looking at interest rates right now being in the fives, you're like, okay, great. We're not in the 80s anymore. But take a look at these other recessions where interest rates went from 11% to 8% in the 90s. And then in the early 2000s, they went from 7.25-ish down to 6.75. In the housing crash, you saw interest rates go from 6% to 4.8%. So you see interest rates come down and continue going down after a recession. And then in the COVID recession, you saw rates go from 3.75 to 2.75. So while housing prices continue to go up and stay steady, you see that interest rates actually come down in a recession, and interest rates actually continue to go down post-recessionary period. So that is why we're looking at the housing market right now, and we're saying if we go into a recession, you're going to see a lot more competition, especially when we are frankly at the lower end of this. And I always find this interesting when I'm talking to people who are buying their, fourth house, fifth house, or something like that. And they started buying houses like back in the early 2000s, or frankly, I have some older clients that bought houses like in the 90s or something like that. And I said, hey, interest rates are about 5%. They're like, well, freaking great. I'll take it. It's amazing. So, if you see those interest rates start to come back down, you're going to see a lot of activity in the same activity. Basically, I think it's going to approach what we saw during the COVID period. So housing prices continue to stay constant in a recession, usually, but interest rates come down. That's why you get into a home, and people are saying it now. It sounded good, but it's now becoming this colloquial thing. You marry your house, you date your interest rate. But I like the premise of it. I've owned my house, the house that I'm currently standing in. I've owned it for 6 years, and I've had 3 interest rates. So your interest rate that you buy your house with is not necessarily the one you're going to keep. So you get into a home, and then when rates drop, you refinance while your equity continues to go up. So I hope you got the answer to that question. God bless you. See you next time on Major Money Matters.